Hi, I'm Peter Mallouk. Welcome to 1,000 Miles from Wall Street. I'm here with Jay Beebe, one of our, best and greatest wealth managers here at Creative Planning. Welcome, Jay.
Thank you, Peter.
And the hot topic on all of our clients' minds is very timely is tariffs. And it's been there since November. It's never gone away. And give us a lay of the land.
Well, you kind of look at the lay of the land and also, too, specifically the history on this tariff negotiation. Tariff negotiations as a whole, they're very normal, but typically they're formalized and they're diplomatic. And usually the communication is very structured and filtered. This one essentially started with a tweet last January. And whenever that happened, the markets went down about 12% over the next 10 days because you have the two largest economies in the world that suddenly you have a huge element of uncertainty that you don't know what the rules are going to be. And so, the markets hate uncertainty more than anything. And so that's why you see, big, of course, swings that are happening around that, which drives investors crazy. And from a media standpoint, of course, the media tends to fuel the fire quite a bit as well. And so if you go through last year, we hit some new highs here in the United States in September of last year, but then the international markets continued to struggle through that time period. In the fourth quarter, of course, everything was volatile, whether it was international or the U.S., everything was volatile in the fourth quarter. And so now we're hopefully getting close to the end, potentially with this tariff negotiation. This week they're supposed to actually have some meetings here in the United States because they made a lot of progress so far this year. I mean, you look at the market recovery this year, it's heavily fueled by the optimism that we're going to hopefully have a resolution soon.
Yeah, I agree. When clients are like, well, what's the big deal? This tariff talk, and who cares if we get this worked out or not? And it's a very big deal because it's a market cycle. They call it a cycle for a reason.
Right.
And you're always looking for when's that downward cycle going to happen? When is that recession going to happen? And this is the kind of thing that could do it. You have, like you said, the two biggest economies. If we really didn't have a deal, you would see the cost of everything from a toy to a car go up for the average American. It'll eventually drive unemployment up. You'd see a restructuring of the global economy as instead of buying some stuff from China, we're buying it from the Middle East. Instead of them buying stuff from us, they buy it from Canada. It's a reworking of things. And I think it's these sudden jerks, jerking up and down of the markets that a lot of people don't understand. And one of the ways I try to explain it to clients is, if I was thinking about buying a strip mall, and it's a strip mall, this great, really busy area, and then the mayor announces via tweet, I'm thinking about putting a roadblock in front of this strip mall. Well, I'm not interested in buying the strip mall anymore, right? I might buy the strip mall across the street. Then he goes, no, I'm probably going to not have one. Well, now I'm interested again. And so that's basically what's happening with the tariffs. This is a very dramatic thing, but it's a very low probability event, but that would be very damaging if it happened. And I think that's why the market isn't overreacting to it now, but when it sees pullbacks that could go on for several months. I think the market's more worried about a miscalculation than anything else, that this goes on too long and we accidentally find ourselves in a recessionary environment because they couldn't get it sorted out. But fortunately for the United States, if you're ever going to have this is the best time in the last 15 years to do it.
Absolutely. I mean, we had a very, very strong market in 2017. And so if you're going to go through this process, it was a good time to do it.
It's nice to do it when the market's strong, unemployment's near record lows, earnings are near record highs. I mean, if this is the time, if you're going to get into it, to do it.
Absolutely.
All right. Thanks, Jay.
Thank you.
This commentary is provided for general information purposes only and should not be construed as investment, tax, or legal advice. Past performance of any market results is no assurance of future performance. The information contained herein has been obtained from sources deemed to be reliable but is not guaranteed.